welcome all of our participants on today's program. So a very, very warm welcome and to our Northeastern Region Tax Roundtable Mid-Year Accounting Trends Town Hall meeting. My name is Peter Scalise. I'm the founding CEO of the Northeastern Region Tax Roundtable. We have an incredibly insightful and dynamic program planned over the next 60 minutes. We're going to be discussing the great consolidation of the accounting firm industry, especially within those top 100, top 200 accounting firms. We're going to discuss why these mega mergers are being fueled with the need for greater subject matter expertise, whether you're looking at international tax services with transfer pricing studies and bilateral income tax treaty analysis, looking at even home office expense allocation studies, the HOA studies, the IC DISC work, the federal credits and incentives work, the SALT work, whether you're looking at income franchise tax or property tax, reverse sales and use tax, the staffing shortages in America, primarily from the baby boomer bubble bursting, just an action-packed program. We're going to discuss global outsourcing and co-sourcing, different types of tailored staffing augmentation strategies, and really the digital transformation of the specialty tax incentive industry that I parlay to a paradigm shift that happened last in our industry some 35, 40 years ago, when accountants stopped preparing returns by paper and pencil, looking at tax depreciation tables and income tax tables, and started using tax automation compliance software like Go Systems and Pro Systems. So we're going to talk about how these end-to-end software solutions have been automating specialty tax incentives, from R&D credits to cost segregation, fixed asset analysis, employee retention tax credits. Let me first start by thanking our presenting sponsors and panelists: Infinity Globus, Sparse Technologies, SegStream, Profitopia. And our very first panelist is the highly renowned Alan Colton of the Colton Consulting Group. Alan is, in my opinion, the leading thought leader in this space. He's behind many of the largest blockbuster mega deals. And we're absolutely honored and privileged, Alan, to have you on today's broadcast. Maybe you can discuss what we're seeing in today's environment with these mega combinations in that top 100, 200 space, what you're seeing with PE funding, and maybe some bold predictions for where you see how we're going to go into the latter half of 2022.
Excellent. Thank you, Peter. It's great to be part of this. And I was panicking a little because the cameras weren't working. And, after you told me I dressed like a slob the last time I was on, I went out and bought a new sport. I want everybody to see it, because if I bring it back in 24 hours, I can get a full refund. So thanks, everyone. The header for my 14 minutes of talk time is: you can't make this stuff up. If you go back in the history books, in the history of public accounting, and you have to go all the way back 135 years, I would tell you that this profession was a steady Eddie. And what I mean by that is it never changed. I mean, we had some recessions. We had the Tax Reform Act of '86. We had the demise of Anderson and Leventhal. But you know what? 135 years ago, if you look in the history book, 31 accountants got together in 1887, and they formed something called the American Association of Public Accountants. I think that today is known as the AICPA, and there's over 45,000 firms. And I would tell you that starting back in about 2.5 years ago, call it February of 2020, little did we know that the next 2.5 years, getting right to today, would produce more change, more innovation, a completely different business model than anything we ever knew. And the reality is there's three kinds of firms out there. There's the firm that I think the feeding at the trough is great. 2020 was a record year. Take 15 months and put it into 12 of revenue and don't spend money. If you couldn't make money in 2020, you need to exit the profession. But what happened? Even though one would say 2020 had a bit of a recession, 2021 was an even better year for many. from a profitability standpoint. There's a whole piece of the cost structure that we found we could eliminate, but buyer beware, because what we learned was the cost of talent was going to go through the roof, and it has for sure continued. People are asking, what impact does the war on talent have? It's a huge impact, and I'll talk more about that. So we sit today with a group of firms. The feeding at the trough is great. They want see change, need change, want change. They're going to just keep grinding and grinding to the bitter end. You've got a second group of firms that see innovation, see change. As one said, what got us to the dance won't keep us at the dance. And there's real strategic planning going on. I'm seeing more of it in the last 2.5 years than I saw in the first 40 years in this profession. And I think there's a third group of firms, they see it, but they can't do anything about it because they can't align the partners. They can't, as the saying goes, get them all on the same page. And that's a function of risk tolerance. It's a function of age. It's a function of the market, the services we provide, and probably gets into even culture and leadership. So, since we talked last time, what's happened? The big four, we call it the great conscious uncoupling. They are getting divorced. Don't let them tell you they're not. They are. And you're going to have audit only firms going forward that probably will keep the brand. Tax and consulting will merge together. And as part of this great breakup, you'll have private equity or maybe even an IPO entering the arena. And nobody did anything wrong. Nobody has to apologize. These were businesses that were pushed together and it worked for a long time. And you know what? In business, I don't care if it's a commercial business, I don't care if it's a non for profit, I don't care if it's an accounting firm. Nothing in business is forever. Life cycles of a business, technology obviously is the great impactor behind all of these things. I talk about the four T's. What are they? It's talent, it's transformation, it's technology. And the fourth one is if you don't do anything about it and embrace the changes, you too could run into trouble. So I think it's a fabulous time to be in our profession. We're hearing these scary statistics about talent going elsewhere. It's real, it's true. Don't go pointing your finger at the AICPA or the state CPA society. This is a new generation, and they've got many, many, many options, and they're taking advantage of it. I hear a lot of partners complaining about the young generation and that they're not loyal. Well, if you ask those kids, they'll tell you they're loyal, and here's what they're loyal to. Get me a job where there's a story, something exciting, where it's growing fast, because fast growth means opportunities to advance quickly. I want to make a lot of money, and I want you to continue to train and grow me professionally. And and it's not like the old days where maybe you pick one. You've got to do all of those things. And if you can, you will be a best in class and a surviving employer. And if you can't, you're gonna have challenges along the way. We see the recruitment statistics of accounting majors coming out of school, and it's down. We see the number of people that want to take the CPA exam, and it's down dramatically. We see firms offering $3,000, $5,000 just to take an exam that many of us took because we wanted to. Who goes through all that torture for all those years of college and training to not get to put those letters after your name? But there's a whole different generation out there that sees things differently. So the big four will break up. Not only will they break up, they will become global firms. They have a global brand today. I think we all know that, but they are individual partnerships that control their own governance and control their own compensation. US E&Y does their thing. EY in Italy or France does their own thing. So what I think you're going to see is true global firms, global audit firms, global tax and consulting. If you sort of go and leave the big four and go to the next group, I call it the mid majors. firms 5 all the way maybe up to firm 30, firms with revenues of 400 million or greater. That group today is immersed in discussions about private equity. Why are they immersed in that discussion? Because they need capital. They need capital to invest in talent, technology, moving from compliance to consulting, advisory, outsource services, and to try to acquire those companies. Guess what? They're not signing up for the old-fashioned unfunded chain letter that for 40 years is how we've done M&A deals. What's the old way of doing it? Come join us. We're not going to pay you anything. You're going to have to revest in our program. And if you make it to the finish line and we're still in business and the industry's still around, we'll slowly pay you 2 times your compensation over 10 years without interest. And you go home and talk to your spouse or significant other, and you say, "We sold the business today." And the spouse or significant other looks at you and says, "Let's get some champagne and celebrate." And they say, "Well, how much did you get?" So, well, I actually didn't get anything. A matter of fact, we had to write a check to the acquirer because our capital account wasn't enough. That is getting disrupted. So what have we seen? We've seen Citron Cooperman marry up with New Mountain Capital, Cherry Becker marry up with Parthenon, and Eisner Amper, the first one to do a big, big deal in the top 20 space, marry up with Tower Brook Capital. And also not to be left out is Shellman, who has done a deal with Lightyear Capital. There have been other kinds of accounting and consulting deals in the past. This is not as new a territory as you would think. Most of the marquee brands in the consulting and search world today, or wealth management, or insurance brokerage. I'm amazed. I saw from one of the PE groups over 100 companies that have gone the way of PE. And what we're finding is there are some PE groups that actually specialize in people businesses, the kinds where the assets go home every night and they decide if they want to come back. So what's happened? We've had 3, 4 deals announced already. I would tell you that there's going to be another 3 or 4 by the end of the year, big blockbuster deals. They're sort of in the 7th, 8th inning, and I guess, well, on one hand, it's not over till it's over. High likelihood those will go on. There's also a group of firms that said private equity is not for us. We're doing just fine the way we are. We're self-funding, and we'll rely on either bank debt or increased capital requirements of our partner group. And then I think there's a group that's just in the middle trying to figure things out. One thing has gotten exploited for sure. The new way to do a merger in the accounting space is with real cash, checkbooks. And we're seeing monetization at closing of anywhere from 25 to 60% as an upfront cash payment with capital gain treatment. And what we're also seeing, and this is one of the things that is different maybe than some of the consolidators who entered in the late 90s, we are seeing the young generation getting behind this. And as the story goes, they're looking into the future. They see the major investment of capital to recreate a traditional business and build out the consulting and advisory space. They're seeing a generation of baby boomers retiring and big retirement obligations. And not only they're asking about who's going to pay that, they're saying, what about us? What's going to happen? And we're seeing a whole new wave, a spike, if you will, in different ways of getting work done. Everybody talks about the spike on the war of talent and the cost to recruit and retain these people. That's huge. Everybody's talking about the spike in the number of M&A deals. That's huge. Everybody's talking about the spike in the number of people that don't want to come back in the office anymore. That's huge. My God, I had a firm tell me, a top 200 firm, that they put out an email to the associates of the firm and said, starting August 1st, we'd like you to come back in the office 2 days. Now you think I'm going to say a week, right? 2 days a month. And they got a lot of pushback. Are you kidding me? Here's a cost that nobody's talking about. It's going to show up in 3, 4, 5 years. It's going to be the young ones that were never properly trained and never had the culture connection that I think created a lot of the stickiness. So, hey, if I was running a firm, I would find ways to get people to want to come back in the office at least 2 days a week. And I don't care if I got to feed them breakfast, lunch, and dinner. I don't care if I have to have a masseuse on staff. I don't care if I have to offer pedicures and manicures and walk their dogs and pick up their dry cleaning and buy their groceries and wash their car and fill it up with gas. We'll do whatever we have to. But we know when they're together, collaboration happens, innovation happens, team building happens, stickiness occurs. It's unbelievable if you think of all these changes. And last, and just moving back to this PE discussion, I'm now seeing many of what I'll call the middleweight private equity groups calling and saying, "Hey, Alan, do you know a firm with revenues of 10 million to 200 million that can produce X amount of EBITDA? If you do, we'd like to be their strategic and capital partner as well." So make no mistake about it, if we were back on this call 2 years from now and taping this call and playing it 2 years from now, it probably would go in the category of dated goods. Um, I wouldn't underestimate the investments that firms are making in offshoring, whether they're forming it with a strategic partner or they're back on big enough to acquire their own. But I would tell you there's a whole generation today graduating the colleges and business schools that if you stuff that mundane work at them, the great ones, not the average ones, the great ones will push back and they'll say the following: "Hey, when I did my 15th tax return, I knew how to do one. And if you think I'm going to sit here for a couple of years and do 1,500 of it, forget it. I'm out." Because there's 1,400 other options of things I can do in professional and financial services. I'm excited for kids coming out of school today. I speak at a lot of the college campuses, and I tell them that the beauty of coming into accounting today, and I don't care whether you come in as accounting, tax, consulting, you're going to get pushed in the fire. You're going to get challenges and opportunities to work and meet with clients that many of us never got. This thing called this apprenticeship, hang with us for 10 to 14 years, stay out of trouble, be technically strong, and you too can be a partner. It's getting disrupted. I think firms are understanding that there's A players, B players, and C players, and the A's are so hard to find that when you find one, you got to game the system. You got to overpay them. You got to give them the best jobs. You got to give them the best training, give them the best mentoring, and make commitments early in the game. Let them know what's in store for them. Otherwise, the competition is too great. Other things are going to happen. So, um, it's, I think even if we look 6 months from today, we're going to see major changes. So, Peter, I'll take it back to you in the booth. Thank you for letting me pine in.
Alan, thank you so much. Always an absolute honor to have you guest speak and so insightful. Really appreciate it. Our next panelists are from Infinity Globus. I'd love to welcome Vivek Shaw, who is the founder of not only Infinity Globus, but also the Phoenix Institute, as well as Amit Patel, who's a managing director. One thing I'm most impressed with the team at Infinity Globus is their staffing augmentation strategies. Whether you're looking at the co-sourcing or the outsourcing, they really offer a tailored solution for their clients. So if you think about the staffing shortages in America, and you're thinking about the needs, whether it be accounting, auditing, tax, advisory, they have that subject matter expertise. I think with the Phoenix Institute, that gives them the education that they're able to get, the theory that they can convert into practice at Infinity Globus. And maybe you could share, Vivek, some of your strategies on how you've been able to cultivate such a strong team. I think you're over 300 team members now, correct? And not only in Ahmedabad, India, but also you've got a team here locally in the States, in Texas and Florida. Maybe you can go through that with us.
Yeah, Peter, thank you so much. And Ellen, again, the excellent speech, and it's always pleasure to listen you. Okay, and it was a pleasure to meeting you in the Vegas AICPA event as well. So, Peter, answering your question, I think that yes, we have around 300 people here in the India. Around 45 people are working in the states, mainly in the Dallas, Houston, and the Florida. The main strategy, what I observed after the COVID, is the scarcity of the resource all over the globe. It's not only in the US or other part of the world, but we can see the same issue here in the India as well in the accounting industry. But we already started this process 2 years back, where we have our own training academy like a Phoenix, and the Phoenix is doing a wonderful job here in the India. Phoenix is giving the skill development courses, mainly the practical taxation, practical accounting, CPA qualification, enroll agent qualification, and those exams are available in the India as well nowadays. So we have a Phoenix, and due to Phoenix, we are getting the highly skilled people fully trained on the US tax and accounting with a few dummy tax returns, preparation, dummy accounting project, and we can offer the higher level services. Right now, you see the our list of the services. Obviously, the lower level services are there. You can see the bookkeeping, accounting, but you will see there's some unique service additions on the Infinity Globus website. Is the forensic accounting, the ERTC. Our team processed more than 2,000 ERTC claim. Okay, and exclusively the around 55 members are working on the ERTC. Not only the ERTC preparation and the filing is the all the shutdown analysis, the executive order, supply chain disturbance, okay, qualification of the ERTC. So we made our extensive research on that, and we are helping the accounting firm in the US as a back office service provider for the ERTC. You can see the audit and attestation services, the economic nexus and the sales tax nexus rules, streamline and the voluntary disclosure filing in our service. You can see the IRS notices reply, IRS tax resolution in our service as well. Multi-state taxation is there. So I think that the Infinity Globus is helping the accounting firm in the US for the all higher level services. Since the we have a highly technical people, I work almost 20 years in the accounting field, work with the large accounting firm, MBF, now video. Amit also worked with the MBF and video for 17 years. So we are using our all the experience of the large accounting working here at the Infinity Globus. And due to that, we can provide the higher level service. Due to Phoenix, we are easily get the people trained on the US tax and accounting, ERTC, bookkeeping, QuickBook, everything, and we are just placing them to our company. That is the reason the 300 people are working here in the India for the Infinity Globus, and we are adding the our team by 50 every quarter. Okay, and our target is to reach 500 people by end of this year. That is something we can do through the Phoenix only, Peter.
That's outstanding, especially with trying to increase another 200 employees by year end. It's very impressive. And at the Phoenix Institute, I know you help them prepare as well for the Chartered Accountant exam and the Certified Public Accounting exam as well, which is tremendous. Amit, could you give us a little background on the skill sets that your team has in the accounting, audit, and US tax market? And I know your tailored solutions, you could be assisting, whether it's a staff person, a senior level person, depending upon the subject matter expertise that needs to be augmented into an existing engagement team. Maybe you can give a background on that, please, for us.
Sure, Peter. Thank you. So some of the aspect I think Vivek already talk about as well, I would say. So when we talk about a skill set, we'll put it in a two aspect. One is a educational and other one is a practical experience with relevant skill set. As far as education is concerned, like there are certified public accountant, enroll agent, and chartered accountant, which is like subcontinent version of a certified public accountant, who are working in this industry for many years. And as far as practical skill set and experience is concerned, uh, in a broad way, we can break it down like a book keeping and accounting, tax return preparation, audit and assurance, compliance and advisory services, like consulting and advisory services. And within that, the skill set, like when we say bookkeeping, is not just limited to just day-to-day accounting and bank reconciliation, but it includes detail like account receivable management, accounts payable management, monthly and quarterly management reports. Even there are professionals who are working in accounting automation at advanced level of ERP software like Microsoft Dynamic and NetSuite. So this is on accounting side. As far as tax return preparation is concerned, as we talk about few expertise services, so it's not just really like limited to basic tax return preparation, but it includes very advanced level of specialized services like state tax nexus study, like employee retention tax credit, international tax structuring, tax planning, inbound and outbound tax compliance, transfer pricing study. And this all skill set is like not limited to one industry, is like on experience includes on various industries like real estate, hospitality sector, investment partnership, and new industries like cryptocurrency mining, hashing power generation, and so on. And on audit and assurance as well, it's not just few compilation, but reviewed financials, audit financials, and including check listed audit clients as well. So to summarize and to in nutshell, India has the largest young population in the world. Nearly about 65% of the total population in India is below 35 years of age. And the skill set that this professional possesses in this US tax and accounting industry is very diversified and dynamic. Thank you, Peter.
Thank
Back to you.
you. Greatly appreciate that. Where do you see the growth, Vivek, at your firm? Are you working primarily with top 100 firms, top 200 firms, top 300 firms? Do you see it with tax advisory firms, the non-licensed CPA firms, private industry, big companies where they have a need in their internal accounting departments or internal tax departments? I can imagine that you're partnering with all these companies alike.
Yeah, Peter. Technically, the goal of the Infinity Globe was to provide the back office support to the any level of the accounting firm in the US. That is the mainly the mission of the Infinity Globus. And if you see our current client strength, it is diversified, starting with the sole proprietor kind of the CPA firms to the maybe a mid-level the firm, or maybe a larger accounting firm. They are using our service for the different domain. We designed the Peter our engagement model in such a way, even if some accounting firm wanted to co-source only a 25 tax return, they can utilize our service. Okay. And we have a firm who co-source and outsource to us maybe a 4,000 tax return in a year. Okay. We have our dedicated staff model, Peter, which suits the small accounting firm as well, starting with the bookkeeper, then accountant, then the preparer, reviewer, and the manager kind of the person. We provide the half time and the full time both. So the small accounting firm, they don't have that bandwidth and the volume. They can utilize our staff for the half time. Okay. So my goal, okay, to serve the CPA firm. So CPA firm and the accounting firm in the US, Peter, they can focus on the client relationship, higher level review, and maybe a strategy, tax planning with the client. And the compliance is kind of the work, the preparation kind of the work, okay, those can be outsourced, okay, and my team can support them. I have a few from Peter, very interesting. With the partnership with the Infinity Globus, now they are offering the other kind of the services to their client as well. Maybe a compilation kind of the attestation services, the sales tax filing, and maybe this forensic accounting, okay, or a business valuation. They don't have that expertise, but I have a team expertise who is supporting them, and they are taking those clients. So my answering your questions, yes, from the small accounting firm to a large accounting firm, that is the goal of the Infinity Globus, and our engagement model is designed in such a way that it suits any level of the accounting firm.
Simply outstanding. Simply outstanding. I appreciate your insight into the global outsourcing, co-sourcing, and overall staffing augmentation strategies. Really critical, because you never know when you might be having a staffing situation where you think you're staffed up for tax season, and then you have some employees that give notice that they're leaving. And now you have to immediately replace. And if you're not able to replace, you've got to figure out, all right, how are we going to get this work done? Because the alternative is the client firing that firm if the work's simply not getting done, or even worse, getting sued for breach of contract for not getting that return out. So I always say you got to have strategic partners in the marketplace, because even though you think you're staffed properly, anything can happen. Especially during the peaks of tax season. It used to be taboo for employees to give notice during tax season, but today we're seeing it across the board. People give notice at any point of the year, and you got to be able, okay, how are we going to be able to staff it? So I encourage the attendees to follow up with our panelists. If you want to put your website in the chat box, Vivek, I know in the chat, someone asked for your website. They want to follow up with you, so that'd be great. Our next speaker, and this is the next part of the program, is dealing with the digital transformation within the specialty tax incentive industry. And like I started with earlier in the program, when I went through the agenda quickly, the last time we witnessed something like this, again, was 35, 40 years ago, when professionals stopped doing tax returns on a large scale by pencil and paper. They were no longer taking out tax tables and depreciation guides and using adding machine tape. They switched over to Pro Systems, Go Systems, amongst other platforms. Well, we have today the founders of several, I'll call it end-to-end software solutions that automates how specialty tax incentives get identified, gathered, and documented at that federal level. So when you're thinking federal credits incentives, we're going to be discussing R&D credits, cost seg, and we're going to be discussing employee retention tax credits. I'd like to first start with Dominic, the founding CEO, and Mark, the Chief Revenue Officer for Sparse Technologies. And I just want to point out, I had the honor to work with Mark for many years back in the day when, probably going back 15 years, when I ran the Northeast tax practice for Grant, and Mark was running it nationally. And, he was able to determine, along with Dominic, the pain points when it came to R&D credits and figuring out, how can we make this easier? How can we automate using artificial intelligence and machine learning, how to identify, gather, and document these claims? And I'm going to, put the platform out there to Dominic and Mark right now to talk about the R&D piece.
Thanks, Peter. Yeah, well, and your explanation of, it was 30 years ago and the accounting firms were going from pencil and paper into computers. I was part of that transition as well. So I guess I've been around here for a long time. So I'm Mark Andrus. It's a pleasure to be here with you today. I'd like to start our presentation with two questions that I'm frequently asked. The first question is, why should I change my R&D credit process? And that's a valid question. because you've been claiming R&D credits for a long time. But the short answer is because the IRS is changing the exam strategy. And that leads to the second question, which is, why do I need to add automation to my R&D credit process? And the answer is because the IRS new exam strategy demands more analysis. So if you take a look at the R&D credit rules, right, they're very complex. However, the typical R&D credit analysis that is performed manually using spreadsheets. And because of that, there's a lot of time constraints. And so often an R&D credit analysis really only includes 3 tasks. That's gathering and manipulating the data in spreadsheets. The second task is asking employees to estimate the time spent on qualified research. And the third task is to prepare a final report. And after you've done those 3 things, you're out of time. So the new IRS exam strategy is simply to challenge the requirements that the taxpayers typically skip, such as analyzing contemporaneous research documentation, analyzing each qualified research project, or allocating qualified cost to projects. So that's kind of the problem that we have in the industry. So the answer is automation. And it's really very simple. Automation frees up the precious analysis time so that a more complete analysis can be performed. And so Sparks, what we're doing at Sparks with our R&D credit tool is we replace the spreadsheet, which frees up a lot of time. We use AI to analyze and score research documentation. So you literally can review thousands of documents in a matter of minutes. And we've automated the report preparation time and the assembly process so that you don't have to spend time with there. So by automating these tasks, the tax professionals have time to focus on the key high-value analysis matters that may have been skipped in the past. Now, to explain how the automation, how technology works, that's really not my thing. That's why I work with Dominic Vitucci. And so I'm just going to pass the time over to you, Dominic. You can walk us through the technology and what we're doing.
Yeah, that's great. Thanks, Mark. I appreciate that. And thanks to Alan, to Vivek, Amit, everybody that's presented before us. And then Peter, of course, thanks for inviting us. Really, it drives a lot to what we've heard already, right? We heard Alan talk about, the 4 T's and technology being such a big part of that, right? Talent, technology as well, kind of interplaying with one another. The key here, like Mark said, is now is the time to automate because we're seeing a fundamental tectonic shift in the industry, right? We're no longer having the ability to just do things through the spreadsheets, do things the old way, kind of the incumbent process as we like to refer to it, right? So the ways that our technology, our software at Sparks works with the R&D credit, it really is highlighting 3 major technologies, right? First, technology to gather and load data, right? Think of it, now your RFIs from your clients, right? Second, and analyzing your contemporaneous documentation, making sure that, as Mark mentioned, you're audit ready, you're compliant with what the service wants, which, as we all know, has gotten substantially harder over the past, 3 to 5 years. And then finally, the report generation, right? It's always interested me to no end, right? That we work so hard, we force our talents, our professionals, our A players, in Alan's terms, to really drive it and get these numbers out the door. But then it takes us 6 months, 5 months, 12 months maybe to get a report out the door to our clients to substantiate the credit. At that point, you get to a very difficult situation for the CPA putting the number on the return, because then who has to sign off on it, right? So let's start at data upload, right? The best way to highlight this is to talk about a couple of our technologies at Sparks, primarily our Connect technology and our intelligent import technology. Under the incumbent process, you'd request your information from your client. They'd send you a spreadsheet. You would have to copy and paste. You'd have to, worst case scenario, you'd have to hand key things in. But the problem with that is that there's a research out of the University of Hawaii that says every manipulation that you make on a spreadsheet has a 91% chance of resulting in a spreadsheet error, right? So when you chalk up all of these manipulations, if you have 100 employees and you're copying over 10 columns, 5 columns, you're really opening yourself up to a lot of points of failure there. So by using our technology, for example, our Connect technology, we have the ability in our software to reach out directly to over 150 payroll providers today. You click on a button in our software, or you can send this link to anybody else at your client or in your organization. You type in your credentials for your payroll provider, username and your password. You hit enter, and instantaneously, our AI goes into the payroll provider. It grabs the relevant information for AI, name, title, department, so on and so forth. It puts it into the R&D credit ready structure, and then it disconnects. So there's no security concern or ongoing monitoring concern. And right there, you've eliminated up to 20% of the time. We've seen in our clients and at firms that we both used to work at, where you would spend 20, 25% of the time of the budget just gathering and messing around with the data to get it into a format that you can start, thinking about. The other option, right, of course, with data upload is if your client says, hey, I'm not comfortable with it. We have technology in our tool to allow you to bring your own spreadsheet. So no longer are you copy and pasting. With our software, you click a button, you upload a spreadsheet in any format, and our AI helps walk you through the healing and the parsing of that data so you can get all the requisite data points into the requisite formats and move on, right? Again, a substantial reduction in time on the data load. Now, everybody knows the calculation. If you have the right data points and you have good data, the calculation, is arithmetic, right? We need to make sure to get through the math, which of course we do. But the real rub starts to come in when you're analyzing contemporaneous documentation, because you can't, and I think everybody would agree on this call, you can't just come up and say, hey, here's my number, but I haven't seen any documents. I haven't thought about this number. You need to have documentation that substantiates that credit, especially now in this environment, with the Chief Counsel memo last October, with the various things that the IRS is discussing, even with the new funding to the IRS, and of course, with some of the activity, not necessarily on the positive side in the industry with some providers that maybe weren't doing a thorough document analysis. What happens now is that you really need to steer into that. And our software allows you to upload any type of document, PDF, Word document, even audio and video, right? PowerPoint, CAD drawings, upload it into our software. Our software will then OCR it, it'll transcribe it, it will get the data out of that document. And then we've trained models upon tens of thousands of documents to read the document like a human, and then assign a score to that document, assign a part of the 4-part test the document best meets, lets you know what the document's about, or even writes a description for you. And all of a sudden now, even for a small client, a client whose credit's maybe $50,000, you can go and analyze 100 documents, 200 documents, 300 documents even, and you dump them in the software. You can see, hey, what's my population look like? Is this what I want to see? Is this helpful to me? Is it helpful to my study? Again, a great way to holistically approach. And then finally, it is really the reporting, right? There's absolutely no reason, and I believe this, and I know Mark believes, and everybody at our organization believes that there's no reason that you should not be able to provide your client a report in real time with your study. The idea is, hey, I'm doing this study right now. I'm looking at the data, I'm analyzing the data, I internalize this knowledge. Why would I wait months and months to write the report, or even weeks? Even if you say, hey, we're really fast, we do it in 5 weeks. Okay, that's fine. The big issue behind that, though, is why does it take that long? With our software, when you calculate the credit, you get a report, a full, I think at this point it's like a 40-page plus report. You get all the relevant tax schedules, so the state and federal forms. You get QRE style schedules. You even get business component memoranda per the Chief Counsel memo last October that indicates how all of that flows into one another. So again, a lot of various technologies working here, but the key here is the fact that we take time out of loading data, we take time out of analyzing documentation, and we take time out of the generation of the ATG compliant report. What we want to do is say, hey, we're not wholesale replacing the professional, but we're augmenting and increasing your speed, your consistency, and your ability to actually apply your professional knowledge in that aspect, right? Like all of our panelists have said, the professional is not going away, but the professional is changing dramatically. With people at the partner level now, people that are kind of in my generation, and even people younger than myself who are really coming up in a much different world than a lot of us have. So it really is about turning into technology at this time and leveraging that to grow your practice in spades, right? The answer is not to hire 100,000 more people. It's to automate out, 60%, 70%, maybe even up to 80% of that busy work. So you can award those A players, even the B players, all of the various, the perks of using technology, give them a high-tech job, give them client-facing work, and then really work in with that group. So with that, I'll pause. Mark, if you have any continuing remarks, or if there's any questions, Pete, by all means.
I'll just add this, that the interesting thing about the technology is, in the past, if one big four firm, for example, developed technology, that technology was just for them. With technology that we're putting together, it really can apply to everybody. They can apply to the accounting firms, it can apply to the taxpayers, it can apply to anybody's process. And that's the exciting thing. And that's what really transforms the accounting industry. So.
Absolutely. No, that's a great point, Mark. And something we want to highlight. Our software is not just for big four or top 10, top 20. We have, I mean, geez, we have clients that are just a couple of guys at an accounting firm, 2 guys at a sole proprietorship, up through, I mean, we've serviced clients in the top 20 firms, multiple clients in the top 20 firms. We've serviced, large payroll company providers. We've even serviced certain clients depending on their needs. So our software is really working end to end for all ends of the spectrum, right? We want to make sure that the R&D credit is democratized. We want to make sure that technology is democratized, right? The big four, they might have technology that they've built themselves. And whether that's a good technology or not, we'll never know, because they don't lease it or give it to other accounting firms that they compete with. That's not true of us. We will work with anyone who wants to do R&D credits.
Fantastic. I was most impressed with the scoring system, where it'll actually say the level of strength a project may have. And whether you're using that as a barometer, if you will, to get to a tax return filing position, or you're looking at it for tax accrual purposes, thinking about, do I need to book a reserve on my financial statements under FIN 48 for ASC 740 analysis? It's such an comprehensive, all-inclusive, end-to-end software solution. I encourage everyone on this broadcast to follow up with Mark and Dominic. They're offering up complimentary demonstrations of the software, and maybe you can put in your contact information in the chat box. Thank you both. Absolutely outstanding. Richard, I'd love to hear. Oh, you're most welcome, Dominic. You're most welcome. Richard, I would absolutely love to hear about your SegStream software. As the founder of the company and head of product, I know you were a practicing engineer for many years, practicing cost seg engineer, and you saw firsthand, similar to Mark in the industry, the pain points that people doing fixed asset analysis, the cost segregation work, were experiencing. And you took the initiative to say, I'm going to build a solution to help make this process better. Maybe you can give us a little background on that.
Thanks, Pete, and thanks to all the other speakers. I really enjoyed that, especially you, Dominic. I definitely geeked out, and I love that. Yeah, so I mean, just want to touch back, before I do any of that, just so I don't forget. I mean, was something that Alan said that really struck me about how top talent, what are they looking for? I remember when I came out of school, and I came into a situation where Microsoft Excel was the status quo, and I just couldn't believe it. I always thought, why would use Microsoft Excel when you could be using custom software to do this? And it just so happened that it was cost segregation. But you talk about, in the accounting industry, you want to be in the position where you're using cutting edge tools that aren't wasting the time of your employees, right? They know, they're on the cutting edge. They're from the new generation. They know what technology should be like. They know it should be easy to use. They know it should be straightforward. Leaving them time to focus on what it is that their professional degree really allowed them to get expertise in. So yeah, thank you for that, Peter. Just to touch on my experience, yeah, I mean, I graduated from Georgia Tech in 2005, electrical engineering, and I came out and I started doing cost segregation. And so, but from the very beginning, just to touch on that again, Microsoft Excel, it's a lot like Dominic said. Every single time you touch something like Microsoft Excel, you're just you have this huge sort of surface area for error, and so you have all these different employees who are going to use this software. Every single time they're touching that spreadsheet and they're copying it over and they're changing this formula or that formula, you have this huge opportunity for error. So I saw that was all a part of it, especially with cost segregation. You're dealing with cost databases all the time, RS means or Marshall and Swift. There's a lot of sort of things that go into doing cost segregation. So, I just realized, after about 10, 12 years in the business, something would have to give with custom software. And I believe, that the time has come. That's obviously, that's my take on it. So that's kind of, that's, when you talk about, where we're at now with cost segregation and doing an automation software and letting it sort of just ask you, embed the cost segregation engineer inside, and then deal with all of that, the complexity behind all of the cells of information, the many rows of thousands of rows of component cost data.
Outstanding. Outstanding. Did you want to show some of the screens? Is that a possibility, or you think,
Yeah, I mean, I hadn't, well, it probably won't do too much good. I mean, I think, for me, I mean, I just like to get across to everyone here, we work with firms, from small accounting firms that are doing a handful of jobs a year. We work with specialty tax firms, and we work, up to the top 30 accounting firms. And really, this is a product that we've distilled the complexity down such that, if you know about depreciation of commercial properties, and you can answer sort of, questions that a cost segregation engineer might ask you, that's how we like to describe the software. We've embedded the engineer in the software. We're going to ask you the questions that I would ask you and that my team would ask you, and then we're going to build the study, based on the most solid principles under the Audit Techniques Guide. So, I mean, if we got into sharing screens, we might get too far down the rabbit hole. And I mean, I'd rather
Sure.
take less of everyone's time, and really, if there are any questions that you have, Peter, or anybody else, I mean, I'd like to address those.
Yeah.
Well, I think you
Hey,
brought
Richard,
out
this
a
is-
really, oh, go ahead, Dominic, please.
Hey,
I was
Dominic.
just saying, Richard, this is Dominic. I figured, since we got an extra minute or so, just volley with their tech friends here. I just, I agree wholeheartedly with your assessment that, now is the time to automate, right? Excel was such the status quo in Excel. This is not to just badmouth Microsoft, because I think they might own Zoom at this point, but either way, the idea is that Microsoft Excel is the gold standard. Now, Richard, I'd love to ask you, what was it? Was there one thing, or was it a kind of myriad items that made you think, well, Microsoft Excel just doesn't service cost seg? And it's something that we saw with R&D. We felt a number of times, hey, Microsoft Excel on the best of cases gets you 60% of the way to an efficient R&D study. And I'd love to get your take on that.
It's a great question, Dominic, and I appreciate you answering it or asking it, because essentially it boils down to custom software, right? If you're going to be doing something in the modern age, whether it be a CRM system with Salesforce or whatever. I mean, even Salesforce, it's a general system that you take, and your development team comes and they have to spend millions of dollars in development afterward. But the idea is that you need to really have custom software in order to be maximizing your team's time and maximizing the value of the people you're hiring. You're hiring these people, these professionals that come out of school and they're rearing to go, and then it's like Alan said, you're going to put them in front of tax returns for 5 years, and they're going to do thousands of them, and they're like, I don't think so. Why don't we have a solution for this grunt work? Why are we going to put everybody through this when we have the technology? We have the the knowledge we need to, and we can embed that knowledge in software. The only thing is who's going to do it? And it looks like you're taking it.
It's us, right?
An R&D. Yeah, it's right, and me.
Yeah. Hey, it's this group, and it's the group that's on the call as well, the people that are really forward facing in the industry, and I love to hear that, right? It's just that, right? It's, you want to retain the best talent. I mean, back when I started, when I was a first year associate, I started almost 5 years ago now, and they sat me down and said, hey, Dominic, open up this spreadsheet. This was last year's R&D study, or even I did some cost seg in my day as well. Hey, open up this spreadsheet. Here's the cost seg we did for a hotel. Just kind of copy, and I'm sitting there thinking, I'm going to claw my eyes out. I can't believe this. This is the plan, is to do this for 14, 15 years until I finally get to foist this upon somebody else. It just didn't sit right with me in the industry, right? And the idea to build custom software to really leverage, our cutting edge technology with AI, NLP, with neural networking. At this point, we're approaching so far beyond what Excel's capabilities can do, and that's what we're working on here at Spark, is to say, hey, there's so much cutting edge technology out there. We have, in the palm of our hands, we have more computing power than it took for us to land a man on the moon. Why are we not applying that to professional services? Why are we not applying that to cost seg, to R&D? I know we're going to have a great discussion about ERTC in a second, but there is so many specialty credits, and it Sparks, obviously SegStream, and all of our other partners. Let's kind of kick the door in and make it the reality.
And I'd like to say something there, because I think sometimes we're getting a little bit too far in the weeds, right? So we're the ones that are getting in the weeds. We don't need our clients to get in the weeds, and what's really important for them is interface. interface design. So that's a simple thing, and it sounds really easy. Oh, point and click here, click this, type this in here. But the easier you make that, that's really the key with getting to efficiency. People don't realize when you're doing something over and over again, saving 2 seconds is the world, and it means the world to my customers. I found out, like when we'll introduce an update to our interface, that's the thing they'll rave about. They'll say, oh, this took 3 seconds faster every single time, and I have to do that 100 times. So that's fantastic. And on top of that, you take the whole idea of distilling things down to their most basic elements, so that the person who's doing the work isn't thinking about anything else except for getting their expertise into the program. And that's so key when you're doing knowledge work. If your employees are there to do knowledge work, they're there to impart their knowledge. They're not there to do some trick to make your software work, or make some, to repurpose, Microsoft Excel or some other application into making it work for cost segregation or R&D or whatever.
And one important
it's all user
factor
experience.
Here, yeah, that's right. And one important factor I want to point out is whether you're working for an accounting firm where you've got an existing practice doing hundreds of studies a year, whether they're R&D credit studies, cost seg studies, whether you're merely rendering the service, doing a few a year, whether you're a tax advisory firm, not a licensed CPA firm, but a tax advisory firm doing this work, these software solutions can add value. And that goes for the employee retention tax credit, where we have Kevin Marshall, who's the founding CEO of Profitopia. And I want to discuss with Kevin, and Kevin, by the way, is the author of a best-selling book on Amazon, Tax Credits Are Sexy. Look at that book. There you go. Congratulations on your success, Kevin, with that book. I would absolutely love to hear about your end-to-end software solution for the employee retention tax credit. And what a pioneer. You were one of the first in the marketplace. And you're still finding a ton of clients that never filed in 2020, 2021. So you're going back and filing amended 941X returns, I'm assuming, correct?
Oh yeah, still doing it.
Okay.
We'll be doing it for the next 4 years.
Wow.
Until the statute of limitations run out.
Right. How do you recommend the use of your software? Is this something where someone could purchase it, license it, or do you recommend your team working on? I know you have offices in Arizona and now in Florida. Congratulations on your combination.
Thank you. Yeah,
with Florida offices.
Yeah, we just bought a firm in Tucson and another firm in Tampa, Florida. I happen to be in Tampa, Florida right now. I'm at a conference. I spoke on ERC this morning to a group of 100 people. So thanks, Peter, for putting this together. So yeah, I will echo the prior speakers talking on R&D. It's really the same thing for ERC or for anything, right? So, the way we started doing ERC a year ago, or a little over a year ago, was we were doing it in Excel, right? So that's the way we were doing it. But if you know anything about ERC, it's very complicated. If there's a PPP, if the client received PPP money, you have to look and allocate those wages, and the best way to do it is by pay period. So you have to look at what the PPP period covered was. You have to look at what the covered period is for ERC and then allocate wages between the two. So what we did is my CFO actually sent 6 test cases to another couple of firms. And in every case, our software created a higher credit than what the firm did manually in Excel. Back to Dominic's point, right? It's, that you have a 90% chance of there being and those are just mistakes, right? Calculation mistakes. But so our software maximized. So the biggest variance was our software calculated a $250,000 credit when the other firm doing it manually in Excel calculated a $200,000 credit. So they left 50 grand on the table for that client. And the client will never know. The client was probably happy, right? Woohoo, we got a $200,000 credit, but our software did better at 250 grand. So yeah, so we've done a lot of things besides writing the book. So yes, tax credits are sexy. I really believe they are, whether it's R&D or WOTC or solar or ERC, right? Our average refund that we're seeing for clients is $89,000. So we also have an app in the App Store. If you look under Profitopia, you'll see that we're the only ones that have an ERC app in the App Store. Written the book, we have the software, and now Peter, I don't even know if you know this. You probably don't. Do you know we're now rolling out an ERC funding program? Peter, do
I
you
was
even
not
know
aware
that?
of that. I was not
So that's
aware.
and that's one of the reasons why I'm speaking here it's to a group of investors. So we're raising money to be able to do ERC funding. So it completely turnkey. So we're partnered with a firm in India that is Infinity Globus. They're on the call, right?
Yeah,
Absolutely.
yeah.
So we've partnered with Infinity. They're using our software. They have 100 dedicated people working on ERC, so they can use our software. We have a couple of sales and marketing partners, and then now we're working on the funding program too. And our goal is to be able to fund ERC loans within 2 days. So that's the latest and greatest. So complete turnkey solution. So sorry, Peter, it's long-winded to get back to your original question. So yeah, because of the software, it makes it easier for any firm or anybody, really. It could be a solopreneur. It doesn't even have to be a firm, but any, can license our software, and you don't need to know a lot about ERC, but it's all, there's some data points and some data entry. But the software will spit out the amended 941 return, which then gets signed and mailed into the IRS, and then the firm could also take advantage of our loan program. So I mean, that's it in a nutshell. Because I could, since I wrote a book on it, right? I mean, I could talk, and again, like I said, I already spoke on this topic this morning. I could talk about ERC forever, but I mean, that's it in a nutshell.
Let me ask you this question, Kevin. Is
Sure,
it
Peter.
more onerous and arduous, or is there, undue administrative hardship if you have a company that uses a PEO as their payroll administrator? So when you got to file those amended
Wow.
941Xs?
Yeah, so PEOs are interesting. That's a great question. Some like ADP, Total Source, will work with us or other vendors. There's some PEOs that won't, because of the, so that's a challenge definitely with PEOs as to whether they will allow their clients to amend or not. So yeah, we've come across a few of these, and like I said, sometimes the PEO will work with us and sometimes they won't. So it's a great question.
Outstanding. I encourage everyone to pick up a copy of this book sold on Amazon, and
it's
tax
available
credits are sexy.
It's available on our website too, the PDF of it. So if you want to save $10 and get it off, you just look on the profitopia.com website. But yeah, or our app. It's on the app is probably the best. If you go to the App Store and just Google Profitopia, you'll find us. But you can get the audio version of it, the printed PDF version of it, or the Kindle version of it on our app. So
fantastic. Let's open up to see if there's any questions in the actual panel box for any of our panelists at this point before we conclude.
Peter, I was good. I did mine in like 5 minutes.
I know. It's such an overlooked area, the employee retention tax credit. So many companies are leaving money on the table. They missed it in 2020. They missed it in 2021 with timely filings. And now we're over halfway through 2022, and there's still so many people that are learning about these credits for the very first time.
I know.
Yeah.
And it's sizable. I think, did I share that our average credit for our client so far is $89,000? So it's, these are sizable tax credits that are available. So we worked with one client. It was about $2.8 million. Obviously it was a college and they had a lot of employees, but yeah, these are sizable credits. Even if you only have a few employees, it's definitely worthwhile looking into.
Do you have any particular industries that you're working more closely with for the ERTC over other industries, or you've seen it pretty much?
Restaurants, clearly restaurants, because pretty much every restaurant in America, whether, it doesn't matter what state they're in, but yeah, pretty much every, restaurants clearly. What's interesting in Florida, that's where I am right now in Sarasota, Florida. In Florida, it's interesting. It goes, so it goes based on what the government shutdown provisions were. And in Florida, most states, it was the governor of the state, dictated what the shutdowns were. In Florida, it was city by city. So that's it's just interesting how each state dealt differently with the pandemic. But yeah, so definitely restaurants.
Outstanding. Outstanding. The funding program is very intriguing because it's going to help companies get that money immediately, correct?
Instead of waiting. Yeah, it's weird. I was just talking to somebody today. We got their, it was $492,000 credit, and she still hasn't seen it yet. It's got to be 10 months.
Oh, wow.
Right. So she's still waiting for a check for 492,000. But yet at some point, some cases, the IRS is processing the refund in a matter of, 4 to 6 weeks. So that's
Yeah.
another rabbit hole, right? Is the IRS and their backlog and all the crap that's going on with the IRS at the moment. But
I know they want to bring on nearly 90,000 new employees. To Alan's
good luck with
point
that.
earlier in the program, I don't know where these folks are going to be coming from because there's a war on talent and everyone is struggling for all levels. If you look at Generation Z, the young people in their early mid-20s coming out of accounting programs and law schools, they're just not at the same numbers as a generation ago. So the accounting profession squeezed on both sides, not enough newly minted accountants and attorneys going into the business. And then with the baby boomer bubble bursting, losing so many great thought leaders all at once, it's really putting strains, which, comes to the reason why, we're having this panel discussion. How do you mitigate these risks? And I always say you can't work harder if you're already working 6-7 days a week year round. You got to work smarter. And how you work smarter is through using automation. Think about these AI-powered end-to-end software solutions, whether it's ERTC with your company, Kevin, or whether it's Cost Seg with SegStream with Richard, or Sparse Technologies for the R&D credits, using Infinity Globus to partner with to ensure that your engagement teams are fully staffed and you can meet your client needs. Because if you fall flat, there's going to be another firm that's going to take your client, and you got to be aware of, okay, there are options out there. It's not the end of the world. I always say every challenge will provide an opportunity if you can find that solution. So you got to think through it. And even though it looks daunting, you got to find a way to win. I really appreciate everyone's time on today's broadcast. I know we went a few minutes over, but it was an incredible program today. I want to thank again our sponsors, Infinity Globus, Sparse Technologies, SegStream, Profitopia. What an amazing broadcast. We'll see you next time. Thanks very kindly, everyone.